So welcome to Learning Objective 4. We just did a whole bunch of adjusting entries in Learning Objective 2 and Learning Objective 3, which means we put all of these entries in the journal. If we put anything in the journal, it's going to affect the ledger. And so now that we've put in a whole bunch of new entries, we're going to have to make sure that the ledger is still balanced. And that we call an adjusted trial balance, okay? You all know a trial balance, right? We take all the accounts in the ledger and put them in the, put the balances in either the debit or credit column and add them up. The adjusted trial balance is the same thing after the adjustments. So when you see the word the adjusted trial balance, that's the trial balance we do after the adjustments, okay? And so this is going to be the focus today. I want you to notice all of those adjusting entries that we did in Learning Objective 2 and Learning Objective 3 to Sierra Corporation. This is their adjusted trial balance at the end of October 31st, 2017. Notice that some numbers are in red. The numbers that are in red are attached to the accounts that went through the adjustment process that you just looked at in Learning Objective 2 and 3. Okay. So here we have, see, cash was not affected. So that's why it's not in red, because cash was not affected by any of these transactions that we just did in the last two objectives. But accounts receivable was. Do you remember the account that accounts receivable was paired with in the adjusting process? Service revenue, right? We debited accounts receivable and credited service revenue. That was in Learning Objective 3. Look at the next account here, supplies account is also, the number is in red, indicating it went through the adjusting process. Again, if it's in red, it was because it went through the adjustments. Right? So what was supplies paired off with? Well, it was paired with supplies expense, Learning Objective 2, right? A debit to supplies expense and a credit to supplies. Change the balances on both of those accounts. Prepaid insurance is the next account that's shown in red. Why? Because it went through the adjusting process. What was it paired with? Insurance expense. We debited insurance expense, credited prepaid insurance. That changed the balances in both of those accounts. Notice the next account that's affected here was accumulated depreciation for equipment. It had a $40 credit. What was it paired with? Depreciation expense, right? This is also Learning Objective 2, a prepaid expense. We debit the depreciation expense by 40, credit accumulated depreciation of 40. Look at the very next account that's affected here on the trial balance. You'll see interest payable is affected here. Well, that was Learning Objective 3, right? When we took an interest expense in that particular month of October and set up the payable, showing we're going to pay it later. The next was unearned service revenue. Why is that account affected? Well, because we earned some of that, right? So we debited the unearned service revenue and we credited the service revenue account, showing that we've earned it, okay? The next account is salaries and wages payable. Why is that there? Because we had to adjust our salaries and wages expense, but sure, we're going to pay it later. So all of the accounts that have the balances in the red numbers are the accounts that were affected by the adjustment process. And so the adjusted trial balance has to get done to make sure all the accounts with debit balances equal all the accounts with credit balances, which they do. That's terrific. Why is that? Well, because we use the adjusted trial balance to prepare our financial statements for that period of time. All of the numbers come from the adjusted trial balance, which of course, all those numbers came from the ledger. The very first and most important statement we put together, as you know, is the income statement. The income statement shows revenues and expenses. All of those numbers come from the adjusted trial balance. After the income statement is completed, we do the retained earnings statement. The retained earnings statement tells us the story of what happened to that profit, right? Remember, net income, earnings, profit all mean the same thing. They all mean it's the same word, it's interchangeable. So the retained earnings statement tells us how much of that profit, that net income, has been retained, kept in the company, and how much was given out in the form of a dividend. That information, we will also get most of that information from the adjusted trial balance. And then the last thing we do is put together our balance sheet. Okay. So again, let's start with the most important one. We've been spending all of our time adjusting our revenue and expenses through that adjustment process. So let's do the income statement. To do the income statement, we need the adjusted trial balance in front of us. Okay. All of the final statement numbers come from the adjusted trial balance. The income statement here is the first statement we do. This is strictly for the month of October, ending 31st of October. The first thing that goes on an income statement is the revenue. Well, we know here the service revenue account is listed, and we had $10,600 of service revenue. That's what goes here. It's the only revenue account this company has, so we can put the number directly into the far right column. This company had a number of expenses. These are all the expenses of the company, right from the adjusted trial balance. We simply lift them up, plop them down here. So again, these are all of the individual expenses. The total expenses are provided here in the far right column, $77.40. Well, good news for Sierra Corporation. Their revenue is much higher than their expenses, which means they'll have a profit for the month of October. So our net income was $2,860. Okay. So that's that's the first step. Okay. How confident can we be in this? Pretty damn confident, because look at the adjusting process we went through. We updated our revenue accounts. We updated all of our expense accounts. We can be pretty darn sure that the net income that we have listed on our income statement is good, is very good. All right, that's the first step. The second step, the story of that profit. What happened to it? Well, that's on the retained earnings statement. The retained earnings statement measures the exact same period of time as the income statement because it's the story of the profit from that income statement. The retained earnings at the beginning of every month will be on the adjusted trial balance. This is a brand new company, so you see the retained earnings that month is 0. And so that's the beginning retained earnings for October. We add to that the net income that we just calculated from the income statement, right? We take away any dividends paid. How do we know if there were dividends paid? You look at the adjusted trial balance. What's in the dividends account? $500. That's what was paid. So that is subtracted out. The difference on October 31st is the retained earnings balance. The net income minus the dividends, $2,360 retained earnings. This retained earnings balance will go to the balance sheet. The ending balance for October 31st, by the way, will be the beginning balance on the November 1st retained earnings statement, because this will show up here on the next adjusted trial balance at the end of November. So that then becomes the beginning balance for that statement. The third statement that we do is, of course, the balance sheet. And here we have assets are always listed first. The asset accounts are listed first also on the trial balance all the way through. And don't forget the accumulated depreciation. Although it has a credit balance, it's an asset account. Okay. We have cash, receivables, supplies, and prepaid insurance. These are all our current assets. Equipment minus our accumulated depreciation gives us our book value of the equipment. Total assets are $21,910. Assets are on one side. Liabilities, stockholders' equity on the other side. Liabilities are listed first. All the liability accounts are here. Notes payable, accounts payable, interest payable, unearned service revenue, and salaries and wages payable. So those accounts will be put here on the balance sheet and totaled. We have total liabilities of $9,550. Stockholders' equity accounts are listed next. The stockholders' equity accounts, we know the common stock account is real and updated here at 10,000. The retained earnings account, we don't pay attention to this because we just did the statement. So the retained earnings on the balance sheet comes from the retained earnings statement that we just did. So as you see, that means our total stockholders' equity is 12,360. We add these two together, and of course they balance out with our assets, and that's a balance sheet. But notice all of the numbers that we needed come from the adjusted trial balance. You didn't realize that when you were doing this in chapter 1 and chapter 2. They were just giving you the numbers. But if you actually had to look up where those numbers came from, they'd come right from here. Okay? So your do it exercise, learning objective 4 is broken up into part A, part B. We're only going to do part A today because it's important to understand the adjusted trial balance. Excuse me. And how to prepare the reports. So here are all the accounts that have debit balances listed here for Slotnick Company. Here are all the accounts with credit balances listed here for Slotnick Company. Your job here, now this particular company was organized in April and is preparing a quarterly statement. So the statement's going to be dated on June the 30th. So the first thing they want you to do is determine net income, which you know is the income statement. The second thing they want you to do is not what I would ask you to do. They only want total assets and total liabilities. So that's, again, I didn't write the book. I would have preferred a better example here. And the third thing they want you to do is what's the balance of retained earnings. So first thing we do is an income statement. So where do we get that? Well, we have to find our revenue accounts. This company has 2 revenue accounts, service revenue and rent revenue. Then we have to find all our expense accounts. Well, we have a number of different expense accounts right here. So this is all the information that we need to do our income statement. And that's what we do. We have 2 revenue accounts. Total revenue is $15,000. We have all these expense accounts. Total expenses, $12,500. This company also made a profit. Net income was $2,490 for the quarter ending June 30th of that year. The next thing they want you to do is put together total assets. Well, here your assets, you have cash, receivables, prepaid rent, supplies, and equipment. And don't forget, if there's equipment, there's accumulated depreciation on that equipment. Right? So those are all of your assets. They want you to know what your liabilities are here. So all your liabilities are listed here: notes payable, accounts payable, all the way down to unearned revenue. Those are your liabilities. So that's the information you need to know to find out that answer. Your assets are listed in the order that you saw here. Again, equipment, we always take away the accumulated depreciation on the equipment to get the book value. Total assets were $23,350. Liabilities, all the liability accounts are simply added up, 7,460. Now, if you know the balance sheet equation, assets equals liabilities and stockholders' equity, well, you know what assets are, you know what the liabilities are, the difference is going to be stockholders' equity. The last thing they want us to do is a retained earnings statement. This is a brand new company, so when you look on the trial, the adjusted trial balance, retained earnings starts at 0, right? We just did the income statement earlier, and we totaled up $2,490 of net income. We take away the dividends. Where is the dividends number? Well, you're going to go back to The adjusted trial balance, here's a dividend, $600. That's where that came from. Okay. So we take away the $600 in dividends, retained earnings, $1,890. That's going to be the focus of today's work. That's going to be the focus of today's work. There is one more part of this chapter that we're going to finish on Thursday morning, which is closing the books on the cycle. Okay. We've just did most of it. You did all the adjusting entries and you have adjusted trial balance to see that they've balanced. You can prepare your final financial statements for the period. If that period is 1 year, we have to go through the process of closing the books, and that's what we're going to learn next class. Questions?